Hello traders, and welcome back to another video. Today I'm gonna show you a simple and profitable trading strategy that works on any asset and time frames, and I'm going to use the Onsen's Discovery Volume Delta Indicator together with the bell curves, and I'm using the indicators with standard settings. So the bell curves is going to serve as a heads up for a potential reversal. This is a negative bell curve which can lead to a reversal back up, and this is a positive bell curve which can lead to a reversal back down. And as you can see, the pattern is consistent. So for the volume delta indicator is going to serve as our confirmation indicator. So we're only going to looking for long when we have positive volume delta. We're only going to looking for short when we have negative volume delta. So keep that in mind. Only long when we have positive volume and only short when we have negative volume. So let's get started. So this is the opening candle of the day. So I mark the high of that candle and I mark the low of that candle. So now I have levels for the entire day where I can look for potential reversal at. And those levels makes my trading so much easier since I can rely on those levels for the entire day. Let's see what happened. The market opens, we make a new high, nothing happens, we don't have any setups to either go long or short, so I'm just waiting. The price comes back down, we break the opening low level and a huge liquidity candle is formed, which is telling me that the reversal is likely to happen. And if we look at the bell curves, we have a huge and nicely formed bell curve. And this is telling me, hey, look for long entries. Look for long entries. We have the bell curve and we have this huge liquidity candle under daily open low. So once we have the bell curve, we get ready for enter long, and now comes the interesting part with the volume delta. We can only enter long if the volume delta is positive, and as we can see, it shifts positive right there, and at the same time the price closes above the opening low level. So that is our entry point. We have three confirmations in place. We have a negative bell curve, we have positive volume delta, and the price closes above the opening low level. So this is a great long setup. We enter long on the when we close above the opening low level, and as usual we can take partial profit when we make a new high, or we can take partial profit once a positive bell curve is formed. So this is an example of how we can use the volume delta to confirm our long entry in this case. So first of all, we had a negative bell curve. Second of all, we turned positive in the volume, and we closed above the opening low level. So a great long setup. Okay traders, let's have a look at a short example, and I'm gonna keep this example simple, explain it very simply so that everyone can follow me. We are not going to use any levels, we are only going to focus on the bell curves and the volume delta. So once a positive bell curve is formed, we are preparing ourselves for a potential short and a potential reversal back down. And in this case, we got the positive bell curve up here. However, we can only enter short when we have negative volume delta. So we have to wait until the volume delta shift towards negative, and this is our confirmation that this reversal is more certain right now. So we turn negative in volume right there, and this can be our confirmation to enter short in this case. And our stop loss should be slightly above the high, and we can have the position back down to the opening levels, which is always a good place to secure profit at. And once we reach the opening level, we can put our stop loss to break even and trail the rest of the position. But this is a simple example of how the positive bell curves gives us the heads up for starting to look for a potential short, and the volume delta, we're using the volume delta as our confirmation to entering the short trade. Okay, let's look for another long setup, and the market came all the way back down to the opening low level. A negative bell curve was formed, which tells us, hey, get ready for a potential reversal. We are at a key level, and once the volume delta turns positive and the price closes above this level, we have a solid setup for entering long. So in this case, the bell curve tells us, hey, get ready for a long. The volume delta confirms that we get positive volume in this area around a key level. So this is a great long setup, and we can expect a nice move up. So this is how I use the bell curves in combination with the volume delta to find more certain reversals. So thanks for watching. Subscribe, like, comment on the video what we should cover next. Have a great day. See you. Bye.